Hey everybody, we're just gonna wait for a couple minutes and let everyone get in here. Questions will be coming in through the premium chat for the premium people, and for those in the YouTube chat, I would suggest typing your questions in there. Yeah, happy Friday, thank you. Today's topic is going to be universes, so it should be hopefully a fun little stream. And if you have questions, you can feel free to drop them in the chat, and I'll be able to go through those once we stop talking about the universes. All right, give me another. You prefer YouTube chat? YouTube chat, please. If you're in premium, you can throw it in premium chat. And if you tag me, I'll make sure to get to those first. But I'll be going live, getting started in just a couple minutes here. All right, all right. So I want to make sure we have some notes here because there's gonna be a lot of different things we talk about. So we're gonna pull up. I don't know if I think we'll do a notepad. We'll make it easy for you guys. Get rid of that. That's for this week. Can I zoom in? I can. Look at that. Fancy. All right. So the first thing with universes, you might be like, Alex, what is that? So when we're taking trades, you're going to be trading in different universes, is what Rob would call them. And I like it because it makes it simple. So whenever we say, when you want to start trading the strat, you should trade 2 up, 2 downs on gappers. That's its whole universe. The gappers are going to be a universe. So what a universe is just the setup you're trading. And we have a ton of different ones. So what people want to do is they'll hop in and they'll want to take every single setup. And you're not going to have a good time doing that because you don't really know what you're looking to do. So the first universe, we'll go like this. The first universe is going to be the gap list. And it's going to be the easiest one because what we're looking to do is trade gap up, sell, gap down, buy. These are going to be the 2 setups that we want you trading. And what you want to be doing is 30-minute and 60-minute signals. And that's it. This is the only criteria that you need. There's going to be different ways that you can trade the gaps, such as there is gap up buys that occur. We can look at one of those from this week. There's also going to be gap down sells that occur. We can look at one of those from this week and last week. So the first one, the gappers. How does that work? So let me, we're going to go like this. So one of them that we had from last week's gap list on Friday was Charter. And this one's just an absolute monster. And you can see it just puked and puked and puked. It was at like around 325 all the way down into like the 280s, which is pretty crazy. So on a gapper, what we want to see, and this actually won't be the first example, we'll end with that. What we want to see is ideally gap up and sell or gap down and buy. We've had a lot of gap up and sells, not many gap down buys. So we'll start here. What you're going to look for is first, you don't want to go and get in and sit here on like a 15-minute time frame. Because if you do that, sometimes it'll work, other times it's get choppy the heck up. So we don't want you doing that. What we want you to do is sit here with a 30-minute time frame and a 60-minute time frame and only look at those two. Because when you're trading a gapper, what you're looking for is the outside day, or in this case, the outside week. So we'll want to see the first 30 of the day either create an actionable signal to go 2 up, 2 down, or go bright red, because both of those things tell us we can expect selling. Because if it's bright red, they're already selling it. And if it's a shooter, or we see like an inside 30 form, that's an actionable signal where we can expect sellers to potentially hop in there. So in this case, the 2 up in red, we can call this a shooter with the big topping wick up here. We would just look for the 2-2 down. Your stop goes here. It goes instantly. And that's your trade. You get in and you hold it. And the reason you hold it is because of when this occurs. So when you get good at this, you can hold them much, much longer, because you can get in here, hold it down into here. When it goes 2-2 against, get out. And that's a perfectly fine trade. 59.73 to 56.9. Perfectly fine. But what we saw is this was a 2 up in red day, and this was a 2 going 3 on the week. So we know instantly they're trying to take this out on the weekly, and they're trying to take this out on the daily to go 3, since we know that happens. So when we get the short up here, all of this mess in here, we don't have to worry about that because we have the short so much higher, it's break even. We're fine. So we can hold that all week. And let's say you did close out. The next day that opens, this is still a gapper universe trade, right? This goes 2 up, 2 down on a Tuesday. And that's good to know about because this reconfirms the sell that's happening here, and it's a reversal. So a 2 up, 2 down reversal. On the daily, you can actually get short on that as well. And you'd be risking more if you're risking high day. We actually didn't do that. What we'd want to be risking is if we go here, when this triggers the 60-minute highs, and we actually use the 3-2-60 here to do that. So we triggered this day with the 60. But in this case, we can just take the daily right there, and that's good. That's good all week, and you can see they close out the lows this week. So that's one example of a gap trade, and there's also the 2-2-60. So you can get short here. When it goes 2-2 against here, though, the magnitude of that is meant to take this out. So you're going to have to get out when this reverses because the magnitude would take your stop. And you'll see they actually ended up doing that this day here. But then the 2 going 3 here, you can get short that again. And if we go to EL, so there's another one on the gap list, you're going to see the same thing. Except we have an inside 30 down that breaks. And in this case, it fails. So you have the inside and down, and then the inside and up right here, you have to get out. And you lose $1.10 a share. And then following that, you get the inside and up, 2 going 3 here. This would be the ideal short to get back in there. And then that was perfectly fine. Didn't have to get out of that. Or the next day on Tuesday, this was also 2 up, 2 down short entry trade. And this was something we talked about on Tuesday because TSN and EL were definitely trying to go outside week. Now with this one, we're going to have to look for that to go 2-2 next week. And it's closer to doing that, so hopefully it can do that for us with a 2-2 day to trigger it. That'd be perfect. We can also do gap down buy. So an example of that was Uber here. And you can see on the gap list, it gaps down. And then on the 30-minute, you get a 3-1-2 actionable signal right here to get long, targeting the highs. You say they blast off into those. Then you get the inside and down against. You just get out. And the reason we'd want to do that is because at this point, you've already completed your try. And we know that because you already went outside day here. So when this reconfirms, your magnitude's to make the new high, and that's it. So it goes up there, and then they pull it all the way back in. And then you can see they gap up and sold, and then 2-2 on Friday kept selling. So we can do that as well, gap down buy. And that's the two things we want you to do. That's it. You can gap up buy, it's just going to be riskier. And what we want to do if we're going to gap up buy is look for corrective activity first. So in this case, TSM This was on our weekend video universe as well as the gappers, because you're going to see on the daily here, it was a gap up on this day. On this day, it was not. So we'll go back over here. So you can see on this day, if you're buying a 2-2 continuation 60, that's a very aggressive entry long. What we'd want to be doing is letting this 60 come in and go red, and then take the continuation. And that's either going to make the high day and keep going for the measured move, or it's not. In this case, it makes the high, reverses, and then creates a 3. You can see they started chopping them up and stuck all inside today. So we couldn't do anything with that really much today. We tried the 60s up, but that failed. But on a gap up and buy, you have to see that corrective action first. And it sometimes will just be a red inside bar. Sometimes it'll look like this. And this was an example of SPY from yesterday. So you can see we have the gap up. And this is not on a 30 or 60 minute. So this is not a trade I want you taking, but it's an example of what we're talking about. So you can see here. So we have a 2-up day. First 15 goes red. So that's corrective if the day is 2 up and we're going to try and reverse back through it. We'd call that corrective. We don't know, but we'd call it that if we're trying to take the reversal here. So when this goes 2 down, 2 up, 15, now you got people that got short. It is a gap up, but you can take the reversal here to take these guys' stops out. And you can see it didn't last very long. It was 2 15ers and then they were pretty much done and chopped the whole rest of the day. But if we're buying a gap up, you have to see it pull back first and then go. And the same thing for if you're selling a gap down. You have to see that gap down, rip up first, and then 2 2s back to the downside. You never want to be shorting into new lows or buying into new highs. You always want to buy this lower high here or sell. In this case, we don't have it, but you'd want to sell the slightly lower low of that. You wouldn't want to just start selling into the lows here as it's taking this stuff out. We want to take the short when it takes this out. And you can see it goes slightly green and then it goes red. So we want to see that first. And that is the gappers universe. And this is going to be the easiest one you can trade. Elaine posts the gap list for free every single day. We have it in the Discord, and she even alerts the setup for you. And I want one more example, actually. So the Bitcoin stocks today on the 60s, you'll see CLSK. Notice the corrective 60, 2 up in red. It goes inside, so it never reversed. It's still trending higher, because this is a higher low and a higher high. So it forms the equilibrium. And then inside to the upside here, you can take that targeting high day, then we don't know, but they did blast off for 60 minutes. Give me 1 sec. Sorry about that. But you can see gap up buy, you got to see that red stuff first. And a few other things. Mara did that, is just a lot weaker. The RevStrat 60. Coin did that with the 2 down, 2 up 60, which lasted for 60 minutes. Then it was done after hitting the magnitude. MSTR also went 60s up, which trended for 3 hours, and then it was done. Hammered back though. But hopefully you're getting the point. The next universe, and this one, I need to get better at getting this video out for you guys, but it's going to be the daily actionable signals. So your universe here is going to change every day. And what you're looking for here is going to be simultaneous breaks and ideally sector specific, or when you have big news events like the Fed, or we're going to have CPI next week, I believe, and then you have the consumer stuff coming out next week. You can also have setup, like same setups. So when everything's moving really volatile, everything's going to look like the SPY and the Qs. So you're going to have the same setups across the whole market. So we could just say same setups during high. So in this case, give me 1 sec. One example of that was, if you follow my Twitter, I posted this out on Twitter, but we had all the tech rallying because of our weekend video. Notice S&PS creates the 3-1 day. So this would go on the daily list because we have all the tech rallying. So they're all breaking their weeks inside and up, or 2-2 to the upside. And this is doing that as well. So that's a sector specific simultaneous break, all the technologies. And then this inside day reconfirms that. And that happened here. An example of that from today would be Adobe. This is also in the tech sector. And you're going to see double inside day. So 2-day inside bar pattern and up right there, 621.34. That reconfirms the tech rally. And we know we have previous range to come back through. And an example of how you would do that is you don't have to be the first one in. So when it breaks, when that initial break occurs during the first 60 of the day, you don't have to buy that if you don't want to, because the risk on that can be a little higher, or a lot of times you'll have really whippy action, especially if it's not all simultaneously happening. In this case, we know the tech's rallying. So when Adobe takes us up, it's probably not coming back down. Right here, you can see they form a new inside bar here. While the day is in force above the previous day's highs, it's shown here, 621.34. So this would be a reconfirming signal above 624, and your stop would go here. Notice how it's the same thing as trading the gappers. You're just trading a different universe. So you can do that. In this case, I took the profit here when it came back in against us, and then just took my break-even stop because I was trading options. But it didn't reverse into the close. So maybe in the next week, we can see this hammer here, reconfirm and keep going for next week. Get the 3-2 month going again, kind of like what Disney did with the 3-2 up. It happened on earnings though. But those are two examples of the daily setups. There's another one this week. I did not get to trade it myself. You see Airbnb. This is just a 3-1-1. Notice how it breaks up, and you can see how it's really whippy up in here. Then you get the triangle layout, slight lower low to that, 2 going 3 right here. You can take that there if you didn't get the daily break later in the day. You get to ride that up into new highs. Take this stuff out. There was a reversal against, but that was still good. They rallied another day. And then today they came in with a gap down because you had some news come out. I'm not sure what it was with Airbnb. It was not earnings. Those are next week. But that would be another example. You can see the inside day into its 3 magnitude. Another example of that would be on the Qs last week and this week. You had the inside day going into Friday after you made slight lower lows to this. So we know if we reverse here, we're trying to take out, make slight higher highs to this, which it did. So inside day and up here on the Qs, you get all day to go after that. So the red to green move on the gap up, that's where we can start getting long. And we're just looking to take all this stuff out. And that would be on the nightly video because that's a daily actionable signal. We can then also have weekly actionable signals. So weekly video. And this is the same thing. Simultaneous breaks, because it's all the same at the end of the day, right? Simultaneous breaks, ideally sector specific. And it can also have just same setups. So in this case, we know the technology sector, even since our macro video, has just been nuts, right? It's been going crazy. So we knew going into this week, and this is something we talked about in our video, the weekend video this week. And your weekend video universe was the XLK technologies. And you'll notice your momentum, hammer counter shooter signal. And what that would do, if it hits its magnitude, which it did, is take that out, 206.15. So notice the second month of the year reconfirms what the first month did. So they bought the first month and came back for more the second. And that's good to know because that means they're serious about buying tech this year. So unless we can take out 189.96 and change that yearly continuity, it's not a bear market, no matter how many people on Twitter try to tell you that. And you'll see here, we created a new broadening formation. So next week, question becomes, can we expand out of that and keep gunning? Or are they going to pull back in, start doing nothing, or even kicker on Monday if they really want to go crazy, but nothing's near doing that. So since the tech was doing that, we knew we could look at PanW, which you'll see is also going to be in the technologies, Palo Alto, 2 down hammer week. And when you're looking at a weekly universe, what you need to understand is you have 5 days in the week normally, and each day is either going to confirm what the week did or it's going to negate. So in this case, PanW, you can see on the first day of the week, notice how it goes up and then pulls back in, going 3 on the day. This is why we like to say you can let them open. You don't have to be the first one in, because the next day you get a 3-2 signal. So that's a 3-2 reversal in force. That's something we know about, right? Then, like we say on the gap ups, you let it go slightly red first. It does that. Then it goes green. You get all day to do that. Then the next day, they open and reconfirm. So you have nothing to do. It's no reversal against you. And then once that's closed, you can start bumping your stop into that. Then the next day on Friday here, they do the same thing. And we can go and then show you crowd. So this one was slightly stronger because it went inside while the rest of the market went 2 down last week. And you'll see the inside and up after this corrective activity on the weekly. And you can see here, also did a 3 on Monday because pretty much all the tech tried to do this on Monday. The stronger things did not go 3. And that's something we'll talk about shortly. But they go 3 here. Then they went 3 again. And then you can see the 3-2 did break. In that case, you'll see we didn't have very many good 30-60 signals. But on the second day of the week here, notice how they gap down slightly. So again, what do we know about the gappers? A gap down's a buy, right? So on a 60 chart, that's still a gap down. So it goes red first, then it flips green. Everyone that got short into that, their stops are going to be up at these highs. So you can see they go and take those guys out. And now if it's really going to go, you got to get outside this try. And we can also say the 3-2 reversal occurred and it got reconfirmed. So the next day opens, also reconfirms. It is a shooter, so there's profit taking, but also reconfirms all that. So on the week, bright green. We can also go to SMH. So along with this tech, XLK, SMH on the weekly video, you're going to notice shooter countered by a hammer. That's a momentum setup. Notice how it gaps up. What do we know about gaps up? From knowing about the gapper universe, the first universe you should learn. You want to see it gap up, go red first, and then to green. You never want to buy into the new high. You want to let people get short first. So in this case, at the beginning of the week, it gapped up. We let them get short first, and then we had the hammer counter shooter 60 signal, the same as the week, because it's the same thing. So we were able to actually go and buy that and trade these to the upside, which told us we could buy forgive me. Told us we could buy AMAT right there. And you can see they did rev strat at the close where we took partials. Told us we could buy LRCX on the 3-2-2 because it's also going to have that same weekly signal we talked about in the video. And same thing at the close. 2-2's back down. We had to take partials. I believe AVGO did that as well. So you see AVGO also did that. Hammer counter shooter. Got to buy that for a bit. And then the 1-3-1 gap up sell, right? Because you got to know about the gappers first. Gaps up, starts to sell. You have to start taking profit because they rallied it and then boom, they went red here. Tells you you're trying to go 1-3-1-3, right? So they're making this broadening formation. If we go to then TSM, this one had the double inside 60 and up. So you got to do that, make the new high a day here. They did slight lower low, and you'd have to take some partials there. And then it does gap up, also sells with the rest. But this is what we noticed. So if we go and take a look, you want to compare the strength and weakness between all of these. So if we switch over here and we start looking at the daily chart, you'll see on Tuesday, LRCX gaps up, goes 3. So it was weak enough to go into new highs and take out the new lows. And it also created a broadening formation here because you have the slight higher high to that, and the slight lower low to this. So if it's going to go back up, you got to get outside of this try, and then it will expand to take out the higher time frame magnitude. It's just how it works. So if we go and then look at AMAT, it's the same thing. So they buy Monday. Tuesday, they go 3, creating a broadening formation. They go up Wednesday, reversing that, 3-2 up, and then they confirm that here and get outside of it. Then you can see they expand. If we go to then TSM, do you see how this one sticks out? Notice how it was not weak enough to go 2 down. And what this means is they bought Monday, and then they also bought Tuesday. And in this case, did they buy aggressively with a bright green bar? No, they didn't, but it's a 2 up. So the buyers were in control on Tuesday. And what it'll look like on the lower time frame is, what does it look like here? It's like, it looks like someone sat on the bid right here and bought anything under 11867. And we were talking about this one at the close, and we said, since you had the relative strength here, we can go and buy that because that didn't reverse. We'll just buy it at the close. And then the next day, you'll see you had the corrective here. So people got short. Their stops were up here. Once you take that out, you have the inside week and up. And this is from the weekend vid. You got the quarters inside and up. And you got the year 312 telling you it's going up there, 145. So once that's a 2 up, you get all day to keep doing that. And if you miss that, which we did, now what do you know? It's like, well, they bought Monday, Tuesday, and Wednesday. It's like, okay, now we can trade this all week knowing it's probably going to follow through. So you have this gigantic candle buy. What that tells you is they're buying today, right? Because how are you going to turn this around? That's going to be very hard. They bought from the second it opened to the second the 60 closed. Then you can see profit taking, but it was still 2 up. So buyers were in control. Then it was inside 60. And then you get the inside down, slight lower low by a penny, potential 3 here. That is another potential buy. And if you know the gappers, you know we can also look at the 30s. And you can see there's also a 2230 up in here to make that potential 3 occur. And then if you didn't get that, there's also the 3-2 up continuation right here. And that never went red. And you can see they get above the morning highs and they continue to buy into the close all the way into the highs. And when this happens, you like to see it continue because there was no profit taking into the close. They got long into the close. And then I believe we had NXPI earnings, and NXPI went 2 up with this earnings. So you can see they go and buy even more. And then inside and up continuation, and they kept going. And we already talked about this one. On Friday, this is where the profit takers came in. Profit takers, and then they did buy a little bit more, but that was pretty much it. So going into next week, this is still an uptrend. You can see 2 up, 2 up, 2 up, 2 up, 2 up, 2 up. So next week, potentially we have this corrective and back up again. Or if the weekly changes, maybe we get some triangle day out corrective activity inside week. So when we're looking at the universe of the weekend video, you stay on them all week, especially when you start seeing them all go in force. And when we saw that happen on Monday, we were like, all right, that's a good thing to see. Tuesday, they went 3, which we didn't really like, but we saw TSM was stronger. And then Wednesday, they all went 3-2 reversal up. So they're all going up at that point. And we didn't even talk about NVIDIA, which you can see also did that. And that's still good, still going, expanding that broadening formation. And SMCI, that one just never went 2 down. They've been buying that one all week. There's also ASML in the chips. And that one's just been going inside up, inside up. They've just been buying, buying, buying. And you can see same yearly signal in force. So when it comes to the weekly signals, we want to let them open. Don't have to be first. And use what you know about the gappers. 30-60 day signals to reconfirm. That's how you get in. So once they go bright green, you get all week. And you know that. You just want to get in any way you know how to. And if you're a stratter, you know you can take the 15, the 30, the 60, the day. You can take them all. The next universe is this same idea, except you apply this to the intraday stuff. And this is what we did today because I got on and I was like, guys, I didn't do much scanning last night. So just to be honest, we're going to let them open a bit and we're going to watch the gappers. So what we look to do is around, let me think. Around 11:30, what is bright green day? Bright red. And another way of putting this is 2 up, 60. Came back to buy more. Or 2 down, 60. Came back to sell more. And all this means is it's something they're actively buying today. And we can let them open and just get in. So Amazon, for example, this one we saw, they bought the first 60, came back for more on the second 60, and on the daily, it's a 3-2. So what are we doing? Broadening formation, it's getting bigger today. So we know we have today to go and do that. We also have the year 2-2 in force. And the week at this point is green and 2 up. So just like you do with the gappers, you look to confirm that. So we didn't have to get any of this stuff. Right here, you had the inside 30. We also had the inside 60. So we were able to, or actually, forgive me, we're going to put the day down here so we can get the 60 up. So you can see there was no 60 signal today, but right here there was the inside 30. So we were able to potentially take that. We actually used the 15er try and do that, but we're not talking about that here. And then you had the inside 30 here. That was something you can confirm. If you're coming in the afternoon, you have no list, this is what you go after because it's bright green. And even if you come in here and there's short signals, if the volatility is high enough where it's moving like, let's say, $1 or $2 a candle on the 30 or 60, you can go in there and you can play the downside too. That's fine. So not something you have to do, but you can once you get good at it, perfectly fine. Because if you take this inside 30 up and you take their money on the way up, when this goes 2-2 back down, you can use their money and get short because maybe it falls off the cliff. We don't know. Potentially it fails one side, potentially it doesn't. And in this case, you can see the 30 triggered the 60 and missed by a couple pennies. Let's see, get exact here. It missed by 2 pennies, so whoop-de-doo. But yeah, so 10:30 ET. You can also wait. You can wait for the third 60 of the day as well. The longer you wait, like the more continuity you'll have, so the more evidence you have. What we want is just nice long green and red bars. That's going to be the theme across all these. And it's just going to be different ways of identifying that. So we can put and to add to this, the same thing can be said about the 15s and the 30s. So off the rip, if you see, boom, gigantic 15, find any way you can get in there if you'd like, especially when you have the 3-2 day going. That can be enough evidence for you. And in this case, you had the rev strat. If we were just looking at this, I did not have this up on my charts, so we did this in the afternoon. But you'll see in here on the 15, we had the rev strat 15er here we tried. Did stop us out. We had take profit here, potential 3 against us, and then the 2-2 against us, get out. And then the 2-2 back up, 15er we could have done. We waited for the 30 to go inside and up, so we didn't trade during that scenario 1. And it looks like into the close, this was after I got off, there's another 2-2 15 and then another inside 15. So you can see potentially 3 ways to get in there. When they're really going, that's what we want to do. And what we can then do is also macro. So what this universe is it's not going to change. So you're going to have quarterly, yearly signals. And it's the same thing. You're going to go in here and you're going to look for actionable day, week, month. And you could also say 60 to confirm. Or negate once you get good at it. And let me we'll zoom out a bit so we can get all this information up here. So the macro video, what we had into this here, we'll just go into XLVs. This is not one I normally trade myself. We do track the signals since we trade weeklies and all that, but you can see the macro video. So this year, you got XLVs. You can come in here and say, I just want to trade yearly signals, and you can just trade the XLVs this year. Perfectly fine. Did go into exhaustion, taking this out. And we did see a couple things exhaust. Not everything did, but a couple things did exhaust, like AMGN from our macro video to start the new year. But once you have this bright green year in force, you know you can go after that all year. And in our case, you'll see they put it in force here. They did create a 3 on the week, so that's a broadening formation, right? If you get out of that, you'll keep expanding. And they did. 3-2 week. If you're a macro trader, that's a 3-2 reversal. You just get long there. And some people ask, like, how do you do it? You can either get long using signals to get in. In this case, you'll see if you got long right into that with the daily as your stop, gaps up, sells. So potentially you have to get out of that, which would have been fine. The next day, 2 going 3, you can just get that again right here. potential 3-day when it goes green with the stop there. Perfectly fine to get the week going again. Or you can just risk that whole weekly. It's really up to the trader and how much you're willing to risk and your personality, because some people can't do that. Like personally myself, I hate putting my stop down there because I would see this 2 up, 2 down day in force and I'd be like, nope, I want to get out. And the second it goes potential 3, I'd get right back in. So personally myself, I don't like doing that, but that is what you can do. You can just throw it at the low. And if you use that methodology, TSM was a great one. You would have gotten stopped out of LRCX to start, and then it re-triggered. You would have got back in with a stop here because that's still good all week when it re-triggers, right? And same with like AMAT. Probably would have gotten stopped out, which is fine. Just get back in when it re-triggers. You can do that. And you'll notice our weekend videos, it's normally going to be this. Weekly is going to be confirming the year here. So that's an example of the macro. But when we talk about macro, what we can do, and this is where the strap out is extremely useful, and I'm just going to plug it here. You can go in here and you can say, well, on the quarter, what are they buying? What's in force? Give them to me. Here's 135 signals, and you can see based on continuity, the percentage gain. So we can just go to the biggest percent gains, like TSM's up there, and we knew about that, right? Looks like FSLY's up there. It might be a gap name. FTNT's up there, which is also on our weekend list. Just had a big gap. In this case, you'll see there's your quarterly macro signal. There's your inside week along with the other relative strength. We got the 2-2 day to trigger the week on a Tuesday. That's a 2-2 on a Tuesday. And then earnings came out, boom. And then gap up sell, right? You get short. So do you see how you need to start with gappers to understand how to do this? And then inside day up, you can start getting long again, but your stop would be there. So that's a little too much for my liking, right? But notice how you need gappers first, because if you understand gappers, then all of this makes way more sense. And a lot of people don't want to start there. But we'll keep going. So we can keep going through this. And what you can do is, since we know the tech sector is going up, you can just filter by tech. Here's all the tech stocks. And you can instantly see like Shop, Snow, SMCI, right? That's a really good one. What's that signal? There's a 2-2 quarter in force, right? Goes in force there. If you're a quarterly guy, your stop goes here. If you're trading the quarter in the years, right there, right? And if you go in here, notice how you have the inside day reconfirmation, inside day rev strat reconfirmation, inside day up reconfirmation. And this one we talked about last week, Thursday, still good. So you get in here at the stop there, $200 if you're trading shares. So depending on volatility, you can get crazy things like that. And you might be like, Alex, how far can they go? It's like, well, until they reverse a weekly guy, how's that going down, right? So unless you start taking this out, no thanks. We're not going to short that. But once it starts puking again, then sure, we'll go after it. But hopefully you can see that's going to be an example of the macro. NVIDIA is also going to be an example. In this case, it's just a continuation of the yearly buying from last year. So they had the 2-2 year on the macro, and then that's still good, right? So if you're trading it last year, you can go and keep trading it this year since it's still going up. It reconfirmed right on the first month of the year with a monthly signal right there. And similarly, notice you had the RevStrat week, and this was actually one we missed on our weekly list, but what we can do is remember what we talked about with letting things go green first. They buy this Monday, right? It's like, how are you turning that around? They come back and buy again on Tuesday. It's like, all right, how do I get in this? Inside day does triangle you out. Hammer day, notice they sell first, then you can get longs back into that. 2-2, 2, 2-2 reversal here. RevStrat here does make the highs and then come back. And then 2-2 day here. That's still really good. And then there's the 3-2 day on Wednesday, all reconfirming all that stuff. And we'll notice the second month of the year, they come back and buy again. So we potentially get all year to do that. So when we're trading the macro, we're looking for signal and then any reconfirming signal, 30, 60 day week. And let me make sure we got that on the list here. Hopefully this is making sense. If I'm not making sense, let me know. Yep, this is all going to be posted. I wanted to make a video of this, but I felt like the stream would be better so you guys can ask some questions. And then on the macro, there's really not much to add. It's quarterly, yearly signals, actionable, confirm or negate. And ideally confirm. We'll just put confirm up there so you guys don't get confused. But when they do start negating, since you know there's aggressive buyers in there, let's say it's a PMG. That's an example we actually can pull up. Again, healthcare stocks, I didn't spend much time myself trading this. We've just been watching the tech. But notice, this is negating what we know to be true in the healthcares. Is AMGN, that was a 2-2 hammer year, and that was good for 14%. So personally, and I don't really talk about this much, I grabbed some shares here, and I was just holding that. Once this went 3 week here, I just got out. I wasn't paying attention to it, so I was like, crap, just going to have to get out of that. And you can see, still perfectly 7%. That'll do. Now it's a 3, though. So 3-2-2s next, or in a couple weeks, that'd be good. Or 3-3, that could be really good. And we're right at last year's highs, so either they're going to 3-2, and you can see on this broadening formation, negate the yearly open, trying to come back through all this stuff, or we're going to set up new signals back through this 3, which would ideally, that's what we want to see, so, because we know it's a bull market, right? So that would be an example of that, where you can take negating signals. You just got to, once you get good at it, you can do that. And this is also another reason why you got to know gappers. 2 going 3, you learn that on the gappers. Then when you see stuff like this and it keeps going, you know you can take all this stuff out too. And then the next universe is going to be Dow Jones. And traders that I've had in our Discord in the past, one of them that was really good, his name is Jam Trades, doesn't post quite as much. He got a very cushy job at Microsoft, but he really likes the Dow Jones stocks. And it's because you only get 30 stocks. You get most of the sectors, and they're all really liquid. They're blue chip stocks, and they normally move relatively fine. Like they trend very, very nicely. So what we look to do here is either one, signals that confirm Dow Jones direction, or signals with full time frame continuity negating Dow Jones direction. And what this is natural selling, or natural selling or buying. And I'm going to put an example here. So hopefully that makes sense. If Dow Jones, like a green inside name, anything going inside and up, that'd be a buy. Or we could also say like DIA, 2 down green, strongest stuff is 2 up. Does that make sense? So we're going to talk about that. But 30 stock universe, it makes it really simple, because if we're going to trade, and this is something we're going to have on the weekend video next week, if we're going to trade, we only have to look at 30 stocks. So we can confirm and negate across stocks within a sector. And instead of confirming and negating across time frames, like the day, the week, the month, and 60 for the weekend video, you're going to be confirming and negating the same time frame across the same index. And let me put up the week in here. Oops. So in this case, we can go into the Dow Jones. You can see some things are up, some things are down. So you get to short the things. If Dow Jones is going up, anything going down, the institutions are selling. And we call that natural selling because, and I'm going to pull up a chart example here so we can have something to look at. I forget. There it is. So for example, there's an inside day in cat, actionable. Inside and down below that, we'd ideally want to take out the low of the mother bar, take out all these pivots here. And it did. So when this goes in force, if we go to Dow Jones, actually this won't be an example of natural selling. This will be an example of relative weakness. So if we go in Dow Jones, at that point when cat went in force, this was inside and red on the day. So what that tells us is Dow Jones, that's consolidating. And that means anyone that long Dow Jones yesterday and bought the dip, their stops down here perfectly fine. Now, anyone that long Dow Jones and bought cat yesterday, they just took all their stops out from You're going to see Monday's low, Tuesday's low, Wednesday's low, Thursday's lows, and they do it on a Friday. So these guys all have to get out. So this would be relatively weak when that goes in force below 32,142. There's a few other ones. Didn't have as nice of a move because Dow Jones really didn't puke that much today. HD did it, and you can see it falls out of force. And if we go on the 60, you'll see in the morning, big 3 to take the day down. They have the Momo shooter. It just didn't do anything. Get out. 2 down going 3 green here. That was when you just had to cut. But Cat would be an example of relative weakness compared to the Dow. Now, when the Dow Jones is inside in red, anything taking yesterday's highs out, that's going to show buying. It's going to show relative strength. So in this case, Intel. And you can see this is still inside weak, but when this goes 2-2 day here, 42.95, they're definitely buying that. And similarly to what we've already been talking about, if you missed that, we mentioned for the small account guys, here's your hammer 60. Notice corrective activity, actionable hammer 2-2 right there. And you can take that, does make high a day, and then comes back in. So didn't get much out of it. You got high a day, which is what it was supposed to do, and that was it. And the reason it did that is because you're forming the inside week. So into next week, what we're going to do with the Dow Jones is look to confirm and negate what it's doing. So in Dow Jones, you'll see on the weekly time frame here, it's an inside week hammer. So anything also hammer on the week and inside, that'd be really good to know about because it's going to move at the Dow Jones next week. And then anything setting up the other way potentially pukes while the Dow Jones rallying. That would show some natural selling. So what we can do, I have this on my little fancy scanner here. This is something we'll get on the website very soon. But you can see we have all of the sectors, so we can sort like that. And these would be the setups on the week. So we can quickly just tab through them. And we'll see we have a shooter in CVX. So notice gap up sell today. If you're a gapper trader, do you know how to do that? You should. And 2 up in red here. Once it's below yesterday's highs, that can be a sell because it's failing the highs there. Your stop would be the highs. It goes 3. So it creates the shooter week. So if the Dow Jones is rallying next week and this goes shooter week down, that would be really bad because it's going to try and take this out. And if it's doing that, that would be a potential 3 on the month because the monthly open was here. So if it hits its magnitude, taking this out, you take the monthly open as well. And this is something, you don't have to go in and short that right away. Let it go bright red first. Once it's close to the monthly open, take signals to take out that monthly open and take this out because it's going to be counter to the continuity, counter what the month is doing. So if you let that go red first, your probabilities are way higher it should work. If we go to Boeing, that's a 3-1-1. So we know Boeing sold the first month of the year. You're nowhere near going 2 up month. So if this breaks higher, maybe it rev strats on Monday and takes all this stuff out, potentially this rev strats back down after taking this. So we'll see. But 3-1-1, either side of that would get our attention in the Dow Jones. And you can see WBA here. Could trigger a monthly down. And you have a 1-3 shooter week. So we're seeing a decent chunk of bearish setups in the Dow Jones. And then here are going to be the inside weeks. So in the financials, you have JPM. This is also in the Dow Jones. Notice for Monday, you have the inside day to try and trigger that, get that going. So we'd like to see it. If Dow Jones is breaking up, if this can break with it, that'd be considered a simultaneous break. JPM confirming what Dow Jones is doing. If you go to Visa, also in the financials, this goes inside and up. That would be reconfirming what the Dow Jones is doing. If Dow Jones goes inside and up next week, could 3-2-2 the day to do that. And you can see it's very simple. You're just going through and you're looking for where's your inside bars, where's your actionable signals. So GS, another one. Here's your 3-1. Notice the 3-3-1 on the day. It's like this thing's primed to try and do something. The only thing is you are an inside month still. So we'll just have to be aware of that because when you're inside month, this can be more likely to rev strat here. So once it makes new highs to this stuff, if it starts coming back in, you might go all the way to the lows. And if you're looking at this and you're like, Alex, that looks like a great pennant, that's why we go outside of that. Because everyone tries to buy the breakout. Once everyone's long, the first guys to take some profit will send it back through. So we'll just have to let them open. And that's why we can let that break occur. You don't have to be that first one in on this weekly. You can let it go green first. Look to confirm it, 15, 30, 60s, or daily signals. And then we have some upside setups as well. TRV, which is also in the financials. So what do we have in the Dow Jones happening? We have 1, 2, 3, 4 simultaneous break in the financials setting up. So whichever way these twos go in the financials, ideally all of them to the upside, that's really good to know about. That would be something we want to trade. So that'll be on the weekend video. And then in the info techs in the Dow Jones, you'll see IBM. Inside, 2 down rev strap. So we'd be looking at that, see if that can go and take all this stuff out. Apple's also going to be an inside week and a 2 going 3 on the month. So depending on what they do with this daily here, if they can take the week up or not, either side of this would get our attention because Apple is a 2 down month still. So inside and down here, maybe they're still trying to trend down, keep that month trending lower with the lower high and lower low. Or inside and up, they can take that potential 3, which is why inside bars are so great, because they're either going to confirm that Dow Jones and the market is still rallying, or they're going to negate trying to go the other way. And we can take either side. You don't have to be biased to one side. And then Intel, same thing, except look at this. So potential rev strap month, that would take this out. What do we know about Intel and the rest of the chips? They're already rallying, right? So this would be Dow Jones simultaneous break on the week, reconfirming the simultaneous break across the SMHs that we just talked about, reconfirming the break that occurred in the XLKs last week that we also talked about. So this, if that can strengthen up, that'll get the market moving a good bit more too, because I'm not sure what part of the Dow Jones that is, but there's a decent little part of the chips in the Dow Jones, so we'd like to see that. And if that breaks up and starts coming through Monday, you're going back up there, 50.36, if we can come back Tuesday and buy again. And if that works, you'll see the 1-3 month potentially going on to get this one moving. So all of these things, up or down, we'll want to see, are they confirming what the Dow Jones is doing or negating? And then I don't know if I don't think I have a specific example from yesterday. Forgive me. Yeah, so off the top of my head, I don't have a specific example of the daily simultaneous break or sector specific with the indexes and Dow Jones, but that's pretty much what we're going to be looking to do. As far as signals with continuity negating direction, what we could say about the market is, well, SPY, full time from continuity up. The month, the week, the 60, the day, they're all green, right? So it's a buy. Qs, month, the week, the day, it's all buy, right? Very simple. So when we talk about natural buying and selling, what we're talking about is something full time from continuity in the other direction. Because the whole market's going up, anything within those indexes or the Dow Jones that's continuity down while the markets are twos to the upside is natural selling or buying. In this case, it would be natural selling. And the reason we know that is because if the whole market's going up and your stock is taking out last month's lows with full time frame continuity, then that stock's not, and the whole market's going up. So what's happening? It's like, well, someone's getting out. And what we saw is Alberta, and this is, I can't remember the ticker name, so Alberta, and you can see that. So it goes full time from continuity down from the gap list, right? So that's a kicking pattern, which we didn't talk about on the gappers, but in the future we'll have a little video about that. But, or actually I already have a video. But on the gap list, gap down, goes bright red first, then you can get shorts, reconfirming that. And we also saw that happen in Charter. And you see the same thing. So puke, right? And what you'll see is the month went red here first. The week was red here first. Then each 60 and day continue to confirm that. So in this case, Charter went inside 60 down here, did not have a 2 up 60 till here, 286.05 from 325.89. And this was on the gap list for Friday. And then it reconfirmed 60s down here, which you can see green to red, didn't get the signal. More 60s down here, more 60s down here, more 60s down here, and then yeah, there's 62 up, and it starts your new broadening formation. After that slight higher high goes 3. And you can see it gets bigger. But what I want you to see here is full time from continuity down occurred right when this opened, and they've just been selling, selling, selling. And that shows natural selling. The other thing we noted with Charter was the PMG on the year. So you'll see this is taking last year's lows. Whole market's taking last year's highs. That's definitely natural selling because most of the things aren't doing this. So we had the PMG. We hit out all three of our targets. This one missed by like half a penny, but we'd like that fourth one still. So like we said, you can let things open up. What I want you to know is this year just started, right? We're on the second month. So how long do you got for this signal below 315.02? It's like you got another 12 months, guys. So there's no reason that this can't go lower. And if it's going to keep going lower, you got a lot lower to go if they're going to keep going through this stuff. Once we make 250.01, then we don't know, but I'm pretty confident it's going down there. So what would we want to do if this is something we want to get short? It's like, well, maybe you missed all this, maybe you missed all the 60s, perfectly fine. This is your triangle layout. 2 down, 2 up reversal. Notice it's green against the red week, the red year and month, and you have green 60s. So people are getting long. They're jamming their stops in here. But this is a sell. So on Monday, 2 up, 2 down. That would take the week 2 down again if it hits its magnitude, and you take out this pivot target, which should trigger more guys to stop out or at least think about getting out that bought a couple years, like 5 years ago. So this is something we want to know about, as well as Alberta. This one, not quite as close to going 2-2 back down, but still, this is corrective. It's going to be very hard to reverse all this. If they do, you'd have to get above this first, 65.8. Until you're above that, I'm not buying that. No, thank you. And the reason that is because this is your try. If you get back into that, we could go back up there. So the range gets a lot bigger to the upside if you get back above 65.8. But until then, no, thank you. It's also going to have the simultaneous break with Charter inside a year and down. And it's also a 2-1-2 measured move. So the same guys who sold here, they're back to sell more this year. And hopefully that's making sense. Let me check the chat. Awesome, awesome. Yeah, we want to trade full time from continuity because if it's continuity up or down, they're buying or selling. That's simple. We don't want to trade stuff against continuity because you're trading against people who are more aggressive in the other direction. So if we get in here and we're like, I want to just buy Alberta, it's like, it's like, well, it just went from 72 to 59 in 5 days. Are you sure? Probably not. Now get back into there, 65.8. All these guys get underwater. So yeah, give me the buy. But until then, I'm good. So the next universe, it's just gonna be similar. And hopefully you guys see it's all very similar, but notice how the gappers, you get very simple and then you get the rest of it, right? So you want to start there. If you go 7, this can be the same thing as the DIA universe, except sector specific. So you might be like, XLV has the hammer year in force. I'm going to trade that all year, just XLV. Perfectly fine. And then you just go within the XLV sector selector. Whatever's doing signals to reconfirm that, go for it. And then each weekend, you do your own little weekend video. It's like, well, what's happening in the healthcares? And ideally, when I do my video, I don't cover every single signal we see, but I do cover what's in force and setting up again. So if your stock from, let's say, your sector XLV, and you just trade that, it'll probably end up in our video and you can be like, oh, that's me. He's talking to me, and go and do that. And what we want you guys to do is start at the gap list. And I'm talking to everyone in the premium as well as the people just learning, because you can learn all this stuff off my channel and Rob's channel. But what we want you to do is start with the gap list and then from there branch out. Just take the 260s, and I didn't even add that. Just take the 2 2s and 1 2s, like inside bar break, 30-60s, and that's it. Make it very simple for yourself. And then the other thing with that is, let's say you're just trading the 60s. You can put up, even on TradingView, if you buy like the couple $1 a month subscription, you can put up like 6 charts on your phone. And all you have to do is 10 minutes before the flip. So at like 9:20, 10:20, 11:20, check. Is there a 60 signal? If there is, you know where your stop goes. You know where your entry is. Take it. It's that easy. And then you can branch out and you're like, well, I just got this gapper trade. It could go 2-2 down on a Tuesday, which is something we know about. So I can just do that too. And now you're trading daily signals. And then once you're doing that, you're like, wow, this gapper just set up a 2-2 week for next week. It's like, all right, now you're trading the weekly signals. And then maybe you're trading gappers, and then you're like, wait, this is in the healthcare sector. And you go look in there, and you're like, wow, every healthcare sector is up $10 today. It's like, all right, I didn't notice that until 10:30, 11:30. Let's just go trade the 2-2 60s and 30s. Make it simple. Or inside 30 60s as well. Any actionable signal. And you can see, then it's like, all right, now I know how to do that. Let's go do it on like a monthly basis, slow it down. And for those that have jobs, macro video, that's where you want to be. And you're going to have the same universe for all quarter or all year. So very, very simple. You don't really change around much. And then the sector specific, it's going to be the same. So like we said, it's like, let's just say XLK, very strong. Also, Jason, this is from the premium chat, but is there correct? Is it correct to say that you only covered FTFC trades so far? What I want you to see is every single one of these is trading in the direction of continuity, because if you're not, it's a losing position. And we know that for a fact because price has to, it can't not. And it has to trade in the direction of the most twos and twos going three. And instead of spieling on about it, I'm going to play a little clip where I do talk about that. And then I'm going to eat a little bit of my pizza. I do have a fish fry I have to go to in about a half hour. So we'll do this quick. And then from there, we'll continue. There's not too much else we have to cover. Some very simple stuff. And we'll talk about that here. So let me know if the audio's messed up or anything. But the second universal truth is an indicator that actually works, and everyone's looking for this. So here it is. I'm giving it to you for free because it's so simple. So what it is the time frame continuity principle. And what it means is we want to be trading the direction of the most twos and twos going three. So we use 4 or more time frames. In this case, we'll actually look at 6. So right here we have the 60-minute, which is your intraday participation group, because each 60 will tell you what they're doing right now, today. And then the daily group here will tell you what they're doing today. So if it's green, they're buying today. Can't hear audio? Let me see. This is why I need you guys to talk to me, because I can't tell if it's playing or not. It looks like it is. Red, they're selling today. Is it too quiet? The weekly group, that will do the same thing. Let me know if that's better. Are they buying this week or are they selling this week? The second that goes green, we know they're starting to buy. And then the monthly group, we like to call this the institutional group, because if this is green, you've got all month. And if it's red, you get all month to the downside as well. So what we look to do is trade in the direction of the most twos. So if we just count, we could say, well, we have a 2-up day, that's 1. We have a 2-up week, that's 2. And then we have a 2-up month, that's 3. So if we're going to trade in any way, we're going to trade in the direction of those because it's going up. Simple, right? So what we look to do then is use the 60 to determine control if we're intraday traders, because each 60 minutes, you're either going to confirm that they're still buying or you're going to attempt to negate. So if we take a look at this week's trading, this was Wednesday's and this is today's trading on Thursday. You'll notice the 60 group buys to start the day. And then you have slight profit taking, where 60 minutes, they take some profit, and then another 60 minutes, it's inside, taking some profit. And people are getting ill-timed shorts in here, or taking losing trades. So what we look to do then is take a look. It's like, well, the day is still up, the week's still up, month's still up, so this is nothing to worry about, right? What we wait for is when the next 60 goes green, and you'll see that happens right here. So we'd say we have corrective activity, people getting short, people taking profit. And then you get a 2 down that fails after a penny lower, goes green. Where's that attempting to go according to the last TikTok? It's trying to go and take this out to go 3. And then once it has done that, that's a reversal. Back to the upside. It went inside and down, and then 3. So now you're making higher highs, and you made lower lows. So we look for that to continue, since we know the more aggressive participation group is the buyers here. And they go 2 up, so they're still buying. Then they go two up again, so they're still buying. Then they go two up again, so they're still buying. And then you'll notice today they go two up again, so they're still buying. And then today they go two up again, so they're still buying. And then right on the flip here, they do some profit taking. They don't reverse. That's an inside bar. It's not a reversal. We'd call that retracement. And then it goes inside and up. That reconfirms the buy. So we look to make new high day, then we don't know. And then they make the new highs, and then they're done buying. So we'll have to see what they do Friday, but at this point, you're not going to change what's happening on the week because that's bright green. It's going to be very hard to change. You're not going to change what's happening this month, which means we can still go after this all month. And you're not going to change what's happening on the quarter because that's a double inside quarter that broke to the upside. We call that a 2-1-2 continuation. And then we have the year here. That's a 3-1-2. You're not going to change that, at least not anytime soon, because that's a 3-1-2 reversal to the upside. So all the twos from the year down to the day and 60 are going to the upside. Price has to trade in that direction. Can't happen any other way. And you might be like, Alex, this is all hindsight. Well, let me show you a clip, and I'll see you guys in the next TikTok. All right. So that was a little briefing on time frame continuity. So hopefully that answers your question. You want to trade in the direction of most twos and twos going three. Can't happen any other way. It has to happen. So you got to be doing that. And someone just said, are there any other targets to the downside before 250? So when we're taking signals, the signal will have a magnitude. So if we're looking at charter on any of these 60s, the magnitude of this 60 here, just based on the 60-minute, is only to take this out. Because we know inside and down here, this was inside the previous range. So if this is our previous range, and we know price takes out both sides of a range, once it's made the new low to that, we need sellers to step up. And the reason we need that is because if it makes that new low and sellers don't, the first guy to take profit sends it back through the range to take this out. And if you put your stop even wider, instead of keeping it nice and tight here, you just lose more money. Because we know if you fail this, you'll take that. So our initial signal on the 60 is just that. But what we know is if the month's going and the year's going, the quarter's all going, it'll go a lot further, especially because this is red on every time frame. So every participant is a seller. The only buyer we had was this 60 guy right here who has no idea. He's just getting killed, right? So you just get in short, and we want to just see this. We just want to see that. This is like the best trade of the year, at least for us. You just want to see this because there's nothing better. This is just a trend of twos. That's a downtrend, and it's on a 60 basis, which means each one of these going two down, you have 15ers and 5ers forming in here to try and do that. And then you can see the second you do get a two up here, it gets countered right away. And now you have a broadening formation. So after this trend's done with this reversal, this is when you start the triangle layout problem. And the range will now have to get bigger again. So like right now, you can see how the tri just continued getting bigger and bigger. Once we get new signals, either the daily 60 signal here, PMG on Monday, come take all these guys out, or maybe we're going to have to wait, let them go up further, create some inside weeks. Because what market will do is it'll trend and then consolidate, or trend and then reverse. So if things are going to continue, you need inside bars. And if we went to the communication sector, you can see it's an inside week there. So actually, no, not IYZ, my bad. So you can see, are we breaking anything? See, it's a 2-2 month down, 2 going 3 on the quarter, inside year. So we need some new stuff to get that thing moving. And it's not everything in there. It's really Alberta and Charter. But since we have no inside bar breaks to keep confirming that stuff, either it goes 2-2 on Monday or things start chopping up next week and go inside. And that was something we talked about a bit today. So if we go to like SPY or Qs, so like SPY, we know that's a yearly signal, so we're expecting it to just keep going. Qs also is going up with the SPY. We know tech's strong. So notice, if this rally is going to continue, you got to form an equilibrium, and then buyers have to step up again. And then you get the measured move. And measured move, I like going body to body just to not get all the wicks in here. But about $1.80, that's what I'm looking for. It goes $1.60, makes it simple. And you can see you have to have the equilibrium. And when this was breaking here, we also saw there's like 20 equilibriums forming during this 60 that also went and broke again. So if the market's going to keep going, everything's going to break to the upside, either with reversals or inside bars. It's just easy to scan for an inside bar because either it breaks up and fails, breaks down and fails, or breaks down and stays, or breaks up and stays. It's pretty easy. And if they have full time frame continuity, we know it should ideally keep going. So hopefully that answers your question, as well as questions you may not have had. So when you want to swing, you got to have long green bars first. And that's the thing most people miss out on. And the second thing is you have to realize that the day in 60 reset every day. So full time frame continuity is the month, the week, the day in the 60. And the day in 60 have immediate control of price. And the reason that's a problem for swing traders is because each day will have to confirm what your swing is doing, or else they're not there. And what I mean by that is if we go, and I'm going to use, oh, oops. Is this. So if we just throw the week and month continuity up here, this will show you when you're in a period of control. So when these are both the same color, if you're a swing trader, you should be swinging. So the second this goes green on the week, you get all week to trade that. Once the month is green, now you got all month. And here's the buyers. So this tells you here, the institutional group is more aggressive. Anytime you're above the monthly open, that's how it is. So you can be swinging long. What's going to happen though is, notice how each day is going to do something different. This went red and 2 up. So there's profit taking, it didn't reverse. This went 2 down slightly and then green. And then the 2 up with the gap, and they took profit. And each day, it's not going to be green like the week and month are. So you're at the will of what the daily participants are trying to do. And it makes it harder simply because you can take signals, maybe take this 2 and the daily group's selling today, right? Even though it gapped up, it's like they're selling today. You can't even take that. And you might be in signals. Like let's say you're in this 212. Let's say you have like this week's calls. The daily group did nothing. Like, well, the weekly group did nothing Monday. Daily group came back and did a whole lot of nothing Tuesday. So if you're in weekly calls, they're worth nothing. And it's just because the daily group wasn't buying this day. And it shows up on the week because it's Monday. The weekly group is the only one there. Then the second day of the week, Tuesday, daily group did go 2 up. So they tried to buy, but sellers came and countered. And then we knew you had the sideways 2-day pattern to break 2 days here. And confirmed on the last. So when you're swinging, you have to let them triangle out first, and you want to see those nice green bars first. So like we talked about last week, Friday, Qs. If we're a swing trader, it's like, all right, here's our continuity, week and month, nice and green, inside day and up, red to green here, you take that. And if you're swing trading, ideally you don't really need the 30-60, just the daily chart. Red to green here, take that. Your stop is the low of that. Because if that gets taken out, it's a rev strat against you. It chops around for 2 days. So you have to be willing to sit through that and understand that if it doesn't take that out, it's still good. This is a 2-day consolidation pattern. Then when this breaks up, now the daily guys are buying. The next day confirms that 2 up again. Next day confirms that 2 up again. So daily guys were nice to you this week. Does that make sense? And if we go and take a look at any of the other ones, stops them out first. The week and month guys are selling. Weekly guys here with the 2 day, you can do that. PMG potentially. If you miss that, at this point here, notice the month is green. So you can be swinging. And you get 2 day here with continuity. So red to green here, you can get long, stop at low a day. Daily guys buy again, then they sell, and they buy again. But 2 down, so they have to go 2 back up, and they take profit, take profit, take profit. Try to buy here. Next day opens. See how that counters? That's a problem. Didn't reverse, but that's a problem. Then this gap down. That's going to get you hurt. And that's just the idea of swinging. That's just how it's going to be. How we not get in that is if we're looking at this, this is on a Monday. This is an inside week when this happens. So we don't really want to be trading the inside week. We want to take signals that could trigger the week. But once this is a 2 up and you're still inside, no thank you. Because on Mondays, the day and the week opens are the same, so you actually don't even know what the daily group's doing. You have even less information. And TSM was an example of the daily group. You're just at the will of them. Daily group, they buy Monday. It's actually the weekly group since they're coupled. Tuesday decouples. Daily group, they try to get short. It's like, what may they be thinking? It's like, well, gap and sell, right? Then Wednesday, daily group is a buy now. And then Thursday, daily group's a buy. Then Friday, daily group's a sell. So even though the week's been buying all week, because it opens here and closes here, daily group, you're at the will of them. So you just have to work around that. But if you focus on the direction, the two up or down, that'll tell you what's happening. Because every two up in here is still confirming the weekly group. Daily group, they're just hurting you. And then once you get, let's say, a signal going, you don't also ah bad words. You don't just have to use the daily. One thing you can do to get more signals is use the 4 hour, which can help you a lot because it makes it a little bit easier. You're gonna get a lot of 3 1s on the 4 hour, and you're also gonna get a lot of 1 3 rev strats. So that is something that can be useful as well. Sarah's a big proponent of that. I used to do it more so. Might start doing it more again. Really, it's up to the trader. But you can see it. You get a lot of inside bars, a lot of 3 1s. So if you like 3 on 2s, the 4 hours where you go. During day trading. So first on Tesla, we weren't even trading that this week. And the reason is because, like we said, what do you want to see? Buy Monday, buy Tuesday. So they did that, or actually 2-2 on a Tuesday. So they did that, which is good. That's part of the turnaround Tuesday universe, which we didn't even get to talk about yet. I don't know if we'll get to it. But when they do that, what does the week look like? Second day of the week. The week looks like that. Maybe actually it was slightly green. It looks like this. So yeah, one going 3. So on a weekly chart, you get long. When this goes green on the week, you get long here and your stop's there. That's it. And if you don't want that big of a stop, you use the 60, which in this case, you can see the gappers, they're going to mess you up. So gap up sell, that's a problem, which is why we start with the gappers. Goes 3. Then it comes back above. When it's back above, the week is still green here. You can still get long, risk the low of that. Because once it's a 3, it's always a 3. It could just go back to high day. And it eventually did. And that's, again, part of the gappers. Once you start seeing the 3s and you understand how the 3s work, it makes a lot more sense. But you can do stops that way. Like, for example, Mara. This is one I mentioned yesterday. Second 60 of the day. So what do we look for, right? Well, they buy the first 60. The 2-week chart goes in force here. So if we're sitting here watching this on the 2-week, we can just put our stop at the low here. That's perfectly fine. Because if it takes that out, that's a 2-2 reversal against. Get out, right? And the daily continuity would have changed. So daily guys, they would have not been buying anymore. This is what I did. It was a very aggressive entry, but what we saw is Mara did this. Riot did that. Coin did that. CLSK had earnings, so it really didn't do much. Mara, Riot, Coin. That's really all of them that we watched. There could be like Hood in there, which also did that. But when I saw Mara do that, I was like, that, oh yeah, MSTR. MSTR did that. So when I saw that happening, you could see it just between an MSTR and Mara. They're both going 2-2 weak. They got a huge magnitude up to there. So that's something we'd want to know about, right? So the way I can get in is I can just risk the 60. It's like, all right, they bought the first 60. What do we want to see if they're really going to buy? Buy the second. So I bought the continuation, put my stop here. Risk is 7 cents there. I actually got it a little late, so I was risking about like 25 cents. But as long as that works, perfectly fine. And then we had the pretty nice gap up today and sit. So that was pretty good. And I actually took a little partial there. Preferred not to do that since the day was 2 up, but I have next week's contract, so I'd rather just get my money out now and leave the rest towards 30. But during day trading, it's the same thing. For example, PLTR. Let's take a look. So PLTR, where's the day trade? I don't see one. I guess there's one on Thursday. Today though, you had right at the open, two up in red. Notice the slight gap higher on the 60 minutes. So you have a 60-minute gapper. It's not a daily gapper. You get 60 minutes to do that. So what is it supposed to do? Two up in red, fail and go three. You get short here. Your stop goes there. You might have to do that like once or twice, but perfectly. That's how we do it there. If we're trading the 30s, if we're trading a three like this, which is the only signal you see on the 30s, the second it's below 2443 and we take a short, if it's a penny below that, 2442, and then it comes back to 2444 and goes above, we can't be short anymore. So this is a very aggressive entry. We can't do that. The potential three, though, we know about that. We can do that. In this case, on PLTR here, you have the corrective 30 during a two-up day, hammer 30, 2-2 buy. And in the case of a hammer, ideally we do a tight stop, but you can risk the low of that, or ideally I'd want to go just around where that open of the candle is, which could stop you out once, maybe twice, but just be willing to get back in. And that's also why we add. So like when this works on the 30, you add on the 60 here, and then your stop gets moved to here. And you can see in this case, 3-3 buying that. It's aggressive entry, but perfectly fine with the 60 hammer going in force right there. Can you take a 15er hammer if the 60 is red? Okay, so think about it this way. If the 60 is two up in red, yes, because that's trending higher. If it's a two down in red, you're trying to buy a knife, dude. No reason to do that. Sometimes they might work and hammer the 60. So be it. No thanks. If you wanted to like for example, when you hit exhaustion risk, you can try and do that, but you have to start small and add. So like when this 2-2 reversal hits its magnitude below that, that tells us we could potentially change direction, and PLTR is a 2-up day. So potentially that can fail. And we also know it's bright green week at that point. We go out here. No, look at the week. It's like you're not reversing that. So at that point, we have some evidence to believe that can go higher, right? So when it makes that low, you can take the three potential 3-5er up. That's fine. You can take the 3-2 up. That's fine. You can take the 3-2-15 up too. That's fine. You can also take the 2-2-30. That's fine. And you can see, draw the broad information first, understand your continuity and how much evidence you have for that to happen. And then when we're looking at this, the 5-minute is showing you what the weekly and monthly guys are doing. Because if the week and month are green and the 5 minutes green, they could be in there. But you need to have the signal and you need to start small, because sometimes that 3-2-5er doesn't work because you're buying during a two down. It's just much riskier. I wouldn't suggest you do it unless you know what you're doing. It's much easier to buy 2-2-60 right here, because right here you have the day green, the week, the month green, full time from continuity right there. So buy 2-2, 2-2 against, get out. And it's 6:04, so I apologize, but the TFC indicator, yeah, so the TFC bars indicator, it is by Trading Guide on Twitter. But what we are working on, me and Trade for Op, we're working on a time frame continuity indicator that's actually going to show actionable signals in force. So this one can use multiple time frames, like this, and then you can also have signals in force to show you just the signals that are going. But right now, it's not doing what I want it to do. So that'll be something we do in the future. So if you're going to try and find it, you're going to have to go here and then oh, right here. So if you just copy this, or actually I can throw it in the link in the chat. I don't know if they'll let you go from that link, but it let me do it. Did you make it premium? Oh, it's just protected. Yeah, use it freely. Yeah, so you can use that, but we will have one coming out with Trade for Op very soon. So that's going to end off the stream for today. We didn't get to go through the universe of, oh, what I mentioned it. What was it? Yeah, so we didn't get to go through the Strat Attack show. I guess we'll quickly run through these and then I have to hop off. 4 minutes. So sector specific, you can also do. So you can also do the S&P 100. That's a good one. Very liquid. You can also do the NASDAQ, which is all the tech stuff. We like that one all the time. That's what we're looking at. And then you'll also have, forgive me if you can hear the dog in the background. We also have Strat Attack Show, which is something Rob used to do. It's something I want to start doing, but we normally just use the Gapper universe and the nightly/weekend video universe. So it hasn't been something I've been doing, but it's going to be a similar thing to the 60s. It's going to be follow through on monthly signals. So bright green in force / bright red in force. Because we know monthly signals, you get all month. So you just look for a new daily signal to set up, take that to get it moving. And then you're also going to be looking for 2 consecutive days in the same direction. So a quick example of that. And I'll zoom out so you guys can take your notes here. And I'll post that in the, I don't know if it'll let me post that in the YouTube chat. Yeah, it will not. So hopefully you guys can take a screenshot or something here. But it's going to be pretty simple. So for example, AFRM this week. So they bought Monday, 2 up again on Tuesday. This goes on the Strat Attack show list because we know they bought Monday and Tuesday, so it should follow through. And then you draw your broad information and gauge the magnitude. So in this case, it was here. So 2-2, you can get long during this day, swing it into this day, take it up to there. And then when it's on the gap list, since you take your profit into the top of the magnitude or broad information, now it went on the gap list, so now you can trade it in the Gapper universe. And that was a good example of a 3-1-2 this morning with a 2-2-2 Randy Jackson here as well. And there's also off the rip, I think it was on the 3-minute or the 1 minute. On the oneers, 2-1-1-2 reversal here to go outside and take out yesterday's highs. That was good. And then the 2-2 here to get short again. But then follow through on like monthly signals or even like quarterly signals. Hopefully you guys understand that. And then the last universe would be the scanner, where you can just scan for things in force. So you can just be like, what's in force this month, this year, this quarter, today, this 60. And you can just go do that, whatever's moving, as long as it has a high enough volatility, perfectly fine. But that's going to close it out for all the universes. So hopefully you guys gained something from this. And I would love to know if you did. Please drop a comment on the video, drop a like. Looks like we got 64 people in here and 18 likes. Would love to get that number up, but I will see you guys in the future videos, and I hope you guys have a great rest of your weekend.